Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news. American resilience is on full display today. First up, our weekly look at the up-to-date stress index of the American labour market shows nothing. Weekly jobless claims fell last week and fell more than expected. On a seasonally adjusted basis, this is a 9-month low. There are now only 1.87 million people on these benefits, 7% fewer than a year ago. There may be a recession coming in the US in 2023, but it won't be led by their labour market. However, the tech sector layoffs keep building, and news about them is everywhere. But demographics and their widespread labour shortages in the skilled positions isn't meaning their labour market is buckling, not yet anyway. And there is no sign in America's factories either. Durable goods orders soared 5.6% in December from November, the sharpest gain since July 2020 and well above market forecasts of a healthy 2.5% rise. Capital goods orders were up 25% year on year. No sign of a recession in this factory order data. New home sales rose in December from November, but they still languished 16% below year-ago levels. American real estate agents probably think there is a recession in their sector though. Still, despite these apparent flat indicators, their overall economy is still expanding. The advance estimate of the fourth quarter American economic growth came in better than expected, recording an annualised 2.9% expansion, which was better than the 2.6% expected, although it was a slowing from the 3.2% expansion in the third quarter. But for such a large economy, and in this part of the business cycle, 2.9% is actually a Goldilocks outcome for them. Hong Kong's exports are really struggling now, down 29% from a year ago, but other nations are rising. Singapore's industrial production rose faster in December than a while, and the Philippines reported very strong GDP expansions. Global container freight rates changed little last week, but what changed there was slips, especially in freight out of China. Bulk cargo rates fell further and are now well below their long-term average levels, and after inflation at lowest ever levels. The US Treasury 10-year yield starts today at 3.47% and up just 1 basis point from this time yesterday. And the price of gold will open today at $1,927 an ounce. That's down $9 from this time yesterday. And oil prices start today up 50 cents at just on $81.50 a barrel in the US, while the international price is up $1 at $87.50 a barrel. And the Kiwi dollar is little changed from this time yesterday, now at 64.7 US cents. Against the Australian dollar, we start today at 91.2 Australian cents, and against the euro, we're still at 59.2 euro cents. That all means our trade-weighted index starts today at 71.3 and also little changed. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.